The fractional reserve system of monetary expansion is inherently inflationary, for the act of expanding the money supply without there being a proportional expansion of goods and services in the economy will always debase a currency. In fact, a quick glance at the historical values of the US dollar versus the money supply reflects this point definitively, for the inverse relationship is obvious. $1 in 1913 required $21.60 in 2007 to match value. That is a 96% devaluation since the Federal Reserve came into existence. Now, if this reality of inherent and perpetual inflation seems absurd and economically self-defeating, hold that thought, for absurdity is an understatement in regard to how our financial system really operates. For in our financial system, money is debt, and debt is money. Here is a chart of the U.S. money supply from 1950 to 2006. Here is a chart of the U.S. national debt for the same period. How interesting it is that the trends are virtually the same. For the more money there is, the more debt there is. The more debt there is, the more money there is. To put it a different way, every single dollar in your wallet is owed to somebody by somebody. For remember, the only way the money can come into existence is from loans. Therefore, if everyone in the country were able to pay off all debts, including the government, there would not be $1 in circulation. In fact, the last time in American history the national debt was completely paid off was in 1835 after President Andrew Jackson shut down the central bank that preceded the Federal Reserve. In fact, Jackson's entire political platform essentially revolved around his commitment to shut down the central bank, stating at one point, "The bold efforts the present bank has made to control the government are but premonitions of the fate that awaits the American people should they be deluded into a perpetuation of this institution or the establishment of another like it." Unfortunately, his message was short-lived, and the international bankers succeeded to install another central bank in 1913, the Federal Reserve. And as long as this institution exists, perpetual debt is guaranteed.